All right, welcome back to Stock Tricks with Nick for this week's Breakout Watchlist from February 7th to February 11th. In this video, I'll be covering 5 stocks that have breakout potential in the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this Breakout Watchlist every Sunday morning and then go live either Tuesday or Wednesday night depending on the trading week. And a quick disclaimer before we start, this is not financial or stock advice. This is all for educational purposes only. Please do your own due diligence before trading. Trading comes with financial risk. With that said, let's get into the charts. The first stock that we'll start with is Apple, AAPL. A couple things really adding to the probability of this trade. Zooming out here, you can see Apple is in a nice uptrend, putting in higher highs and higher lows. Recently, we had a move off the low here of about 14%. That includes a 7%, I believe 7%, yeah, 7.5% jump on earnings, which we saw a continuation the next day through all the key moving averages here. And then when Facebook reported, they were down 25%. The NASDAQ was down 4% that day. Apple was only down 1.7%. So again, showing good relative strength compared to the market. On Friday, we had lower highs, lower lows, but we found the low getting supported at the 10, the 20, and the 50-day simple moving average. All of those key moving averages right around the same price. Good support there, along with the main part of the volume shelf on the right side here. So I'm looking for a break over Thursday's high, 176.24, maybe a break over 175 to get in a little bit lower, and then we can manage risk against this low point, which would be about 3% there. So not a very large risk. A couple other things that I like about Apple. ATR, average true range, is starting to decline. This measures the daily volatility in these daily bars. So you can see that is starting to decline here, meaning we could put on a larger position size because our stop is only 3%, and we can manage our risk against that low. Another thing is relative strength. I talked about it earlier with this 2% pullback versus the NASDAQ pulling back 7%, or 4%, excuse me. But over the last couple weeks here, from December through February, we see relative strength is holding up much better than the QQQs, which is what this is compared to. So even as Apple was putting in a new low here, relative strength compared to the QQQs was putting in a new high. So that's something that we want to watch for. So when the market is ready to turn around, start uptrending, this is a name that's already kind of showing you, hey, no one wants to sell us. We're making new highs. We're above all the key moving averages, and volatility is starting to decline. That's AAPL. Next, we have a familiar name, Dutch Bros, BROS. This was on the breakout watch list, I think 2 weeks in a row. And we did see a very strong move last week. We got through the 50-day simple moving average and $50, which was the potential entry point there. We had a nice about 21% move up, and then 1, 2, 3 days consolidating with Friday's candle being an inside Thursday's candle, and mostly, for the most part, in this upper wick here. So really strong move on great volume through that 50-day moving average and the $50 range. And now we're starting to consolidate here. Relative strength compared to the NASDAQ, very, very strong here, putting in higher highs and higher lows. And then looking at ATR starting to decline here. Ideally, we get a couple more daily bars where we're trading sideways, tightening up, allowing that 10-day simple moving average and the 20-day, or 10-day exponential and 20-day exponential moving average to catch up. And then potentially a trade around the second half of the week where we curl up and then break out. I did see earnings estimate was supposed to be on February 9th, but I didn't see anywhere on their website confirming that date, so I think it is just an estimated earnings date as of now. But as of always, we don't want to be trading stocks going into earnings without any profit cushion, because earnings are typically a binary event where we can't manage risk to the downside after the earnings report comes out. So it's not a trade that we want to take going into earnings if those are coming out. So keep an eye on that for Dutch Bros. Next, we have GEL, and this is an oil and gas stock, which is a very strong group in the market as of now. You can see a kind of a VCP pattern showing up here, 33% decline. We pulled back the second time, 22%. We have this mini third pullback here, about 9%. So each of these pullbacks are starting to get tighter and tighter. And then we did bounce off the 200-day moving average, moved through the 50, the 10, and the 20 EMAs for about a 16% move. And now we're tightening up. We had 1, 2, 3 candles right around the same price, and we're looking for a break over Friday's high, 1201, nice entry there. Taking a look at ATR, average true range, that's declining because we're seeing these daily bars tighten up. We can use a tighter stop, the low of Friday or the low of Thursday, still about a 3% risk there. And then taking a look at relative strength compared to the NASDAQ, you can see we are uptrending there as well. So we're aligning the relative strength, we're aligning probabilities with relative strength, ATR declining, this pattern tightening up with 33% pullback. Second pullback was 22%. Third pullback was, 9-10%. And now we have a nice entry point with a break over $12 with GEL. Got two more stocks for you. The first one is SF. And as you can see, zooming out, we're in a very strong uptrend. Then from May of 2021, we kind of based out, tried to rally through here, had about a 12% move in October. And then as the market rolled over, this rolled over as well. We had the first pullback from high to low. Let's measure this. 17%. And then we rallied not over the previous high, but a second pullback of 15%. One thing that I really like about the second pullback is we undercut the low of the first one. So anyone who was buying off the low here likely got stopped out after another 15% pullback. And we took out that low, 64.79, by just a few pennies, 64.38 and 52 these 2 days before we rallied up. We had earnings, 16% through there, and then eventually a 22% rally. Now looking at it, we have a nice, let me move this over. We have a nice entry point through these last 2 days highs, 78.42, 78.43. So break over that area is where I want to be taking the trade. We had good volume on this rally, which is something to note. And then taking a look at both ATR, average true range, starting to decline, still elevated. So a few more days trading sideways, allowing that 10-day EMA to catch up would only improve the probability of the trade. But then taking a look at relative strength, you can see that is putting in higher highs and higher lows. So that is a name that we want to keep on the watch list. This is SF. And last but not least, we have Victoria's Secret's VSCO. This is a stock that's been on the watch list for many weeks now. We've gone through the initial IPO run of about 55, call it 60% here. Then we had that strong decline, which it looked like it was just flagging out along the moving averages, potentially breaking out to the upside, but nope. We got a pullback of 37%. And from there, we put in kind of an inverse head and shoulders here. So that first pullback got undercut with 1, 2, 3, 4, 5, about 5 daily lows here. We pulled back the most, about 5.3% from that low. Let me take that away. Then we rallied up, put in a higher low here. And one thing that you want to look for with inverse head and shoulders is on the right side of the shoulder, when you're trying to break out to the upside, you want that higher than the left shoulder, which is what we got with VSCO, Victoria's Secrets. When you're looking at head and shoulders patterns to break to the downside, you want the right shoulder lower than the left shoulder. So it's inverse for the inverse head and shoulders pattern. With this, we had a good kind of volume breakout through the key moving averages, the 50, the 20, the 10. From there, we had a quick check back to the 50-day on January 31st. That held as support. And then we started building out here. So this could have been a trade you took on Friday with a break over this 57.60 area. I did not take the trade on Friday, but what I'm looking for is this downtrend line that got broken once here, but quickly pulled back. Now it looks like we're really tightening up right around that area. So a break over Friday's high, $57.94, call it $58 is a potential entry point for this stock VSCO. I love that the 10 and the 20 is now curling up. We're right at that buy area. So if we open lower and then take that out, really nice trade there. Taking a look at the ATR, starting to decline a little bit, and then the price relativity compared to the QQQs is also in an uptrend. So we're building on relative strength. The price range is starting to tighten up a little bit, but above all the key moving averages, and we have that downtrend line to break as a potential entry point. Again, $57.94 or $58 for Victoria's Secrets. All right, that's gonna be the breakout watch list for the week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I put this breakout watch list video out every Sunday morning and then go live on Tuesday or Wednesday night, depending on the week. This week, it'll be Wednesday night. Have a great rest of your weekend, and I'll see you guys on Wednesday night.